All right, let's talk about something you really don't see every day. A company, AdaptHealth, puts out its Q2 earnings for 2025, and by all the usual metrics, the numbers were, well, a miss. But the stock absolutely soared, so we're going to dig in and figure out why. So here's the big puzzle we're putting together today. AdaptHealth misses on its earnings per share, it misses on revenue, and yet the stock rallies over 8% on the day. I mean, what gives? That kind of reaction just screams that there's a much bigger story here. So what did Wall Street see that wasn't obvious in the headline numbers? Okay, so first things first. Let's look at the numbers that, on their own, would normally have investors running for the exits. This is the stuff that, in a vacuum, looks pretty bad. I mean, just look at this. It's a clean sweep, and not in a good way. GAAP EPS was off by a few cents. The adjusted number missed by an even wider margin, a whole 7 cents. And revenue? Yeah, that came in just a little bit late too. Top to bottom, these numbers were definitely underwhelming. And, it wasn't just about missing what the analysts expected. The company's revenue actually went down compared to last year. Now, a negative growth number, even a small one, combined with missing on earnings, that's typically a recipe for disaster on Wall Street. So all signs were pointing to a really bad day. But that's when the entire story got flipped on its head. And this is it. This is where one single announcement came along and completely changed the entire conversation, making all those financial misses seem almost irrelevant. All of a sudden, investors realized that the Q2 profit and loss statement was basically just noise. The real headline, the big story, was buried in a strategic update. And this move was so important that it forced everyone to completely rethink the company's entire future. And bam, here it is. AdaptHealth landed a massive 5-year exclusive deal with a huge national health system. We're talking about a partnership covering over 10 million people. This is a $1 billion-plus contract that's expected to bring in over $200 million in new revenue every single year once it's fully up and running. This is an absolute game changer. So why is Wall Street going completely nuts over this? It's all about the type of deal it is. It's a capitated agreement. So instead of billing for every little thing, AdaptHealth gets a predictable, fixed fee per person per month. For an investor, that kind of recurring revenue is like gold. It makes their cash flow super stable and predictable, and it takes a huge amount of risk off the table. The CEO, Suzanne Foster, really hit the nail on the head. This isn't just about a big paycheck. It's a massive vote of confidence. A major player in healthcare basically said, "You are our essential partner," which confirms AdaptHealth can handle business on a massive scale. And that is why the stock popped over 8%. The market said, we don't really care about one so-so quarter. We care about this billion-dollar deal that fundamentally changes the quality of the business for years to come. The long-term win just completely overshadowed the short-term noise. Now, it's really important to get this. A deal this big doesn't just fall out of the sky. It's actually the crown jewel of a very deliberate strategy that management has been patiently putting together, piece by piece. And management's been super clear about their game plan. It boils down to these 3 things. That massive billion-dollar deal, that's step 1 in action, growing the business organically. But they've been making some serious moves on the other 2 levers as well. So let's talk about step 3, making the balance sheet stronger. Just look at this timeline. They have been on an absolute mission to pay down debt. Over the past year and a half, they've cut it by $345 million, getting their leverage down to 2.81 times. They are steadily marching toward that 2.5 times target, which just makes the whole company much, much healthier. And part of this whole strategy is about focus. They know their bread and butter is in sleep and respiratory care. So they've been trimming the fat, selling off some non-core assets in that wellness at home bucket, and using that cash to, you guessed it, pay down more debt. It's a smart strategy. Get lean and double down on what you do best. So we've seen the kind of ugly quarter, but we've also seen the massive strategic win. What does it all mean for the stock going forward? Well, it's time for the next call, where we put it all together. There are really 2 ways to look at this. The bull case is pretty simple. This new contract is a catalyst that fundamentally rewires the whole company. Predictable revenue, less risk, that deserves a higher stock price. The bear case, though, is all about execution. I mean, to pull this off, they have to hire over 1,000 new employees. If they stumble on the execution, things could get messy and expensive real fast. And, their own financial guidance tells this exact story. Revenue guidance is up a bit, which is great, but look, Adjusted EBITDA is guided down. Why? Well, that's the cost of investing to get this massive new contract up and running. But here's the key. Free cash flow guidance is unchanged. That's a huge signal that the underlying business is still a rock-solid cash machine. So, after weighing all that, our call on AdaptHealth is an outperform rating. We think the market got this one right. You have to look past the short-term costs of the investment and the Q2 miss. The real story is this long-term structural shift to a much higher quality business model, and we believe that justifies more upside as they execute. But the final thought I'll leave you with is this. AdaptHealth is in a race. They're trying to transform into this high-value system-level partner. The big question is, can they get all the benefits from this pivot before the next round of government competitive bidding squeezes the whole industry? The clock is ticking, but you know what? Their timing might just be perfect.
And as always, this is not financial advice.